Imagine having the ultimate cheat code to wealth.
Right.
Your nation's factories are just booming. Your exports are up 260%.
You are printing money.
Exactly. Your merchants are getting incredibly rich. They have this beautiful structural advantage in the global market. And then your own government outlaws your success.
They literally flip the table.
They deliberately crush the domestic economy. They trigger a massive market panic. They sell out the country's dignity. And why?
To get an imaginary blue check mark.
Yes, an imaginary blue check mark from British bankers. Welcome to today's deep dive. I am your host.
And I am the resident expert for this dive.
We are jumping into a fascinating piece of research. It's an incredible working paper by economists Michener, Shizume, and Weidenmeyer. The year is 1897.
The location is Japan.
Right. And the event is the supposedly brilliant decision by the Japanese government to adopt the gold standard.
The history books call this a masterstroke. They say it was the dawn of Japanese prosperity.
But the data, the actual data tells a story of an absolute scam.
It is a wild ride of corruption, panic, and sheer dumb luck.
Let's start with the reality conflict, because this is so relevant today. You see this on the news all the time.
Hard currency. Is it cure or is it poison?
Exactly. Look at emerging markets today. Developing countries. What do they do when they want stability?
They peg their currency to the US dollar.
They hook their wagon to the biggest horse. They desperately want that stability. They want to prove they belong to the first world club.
They assume if they play by the rules of the superpower, they get rewarded. They think capital will flow in.
But what actually happens, we watch their local assets get completely wiped out.
The anchor drags them straight to the bottom.
Their industries choke. Money becomes way too tight. And 130 years ago, Japan was staring down this exact same terror.
They were anxious. They were an emerging market trying to sit at the table with massive empires.
So let's unpack the biggest illusion in economic history, the good housekeeping scam.
This is the foundational myth we have to destroy.
Every textbook says joining the gold standard lowers a country's interest rates. It is universally accepted fact.
They call it the good housekeeping seal of approval.
Explain that to me. Why would pegging to a shiny metal automatically make you a safer bet to a guy sitting in a bank in London?
It is basically a promise that you will not print your way out of debt.
Okay, right.
If you just use paper money, investors are terrified. They think, well, I lend you $100, you just print $1 million new bucks to pay me back.
So my return is functionally worthless. Inflation eats it.
Exactly. But you cannot print gold. So adopting the gold standard is a physical constraint. You're telling the world, hey, we are fiscally responsible.
We physically cannot cheat you.
Right. And Japan in 1897 is cited as the ultimate proof of this. Scholars claim that the exact second Japan joined the Gold Club, their risk premium completely vanished.
They say borrowing costs plummeted by a massive 200 basis points overnight.
2 full percentage points, just instantly gone.
Okay, put that in real terms for us. If your mortgage drops 2% tomorrow, your whole life changes.
It is a historic triumph. For a developing nation, it's the difference between struggling and building an empire.
But here is the face-slapping reversal. The data is entirely fake.
It is a statistical sleight of hand.
When I read this in the source material, I was floored. How did these prominent scholars prove this miraculous drop?
They duct tape 2 completely different financial products together.
You just splice them. It is wild. Break down the scam for us.
So, to show this beautiful drop in interest rates, historians looked at a specific Japanese bond from 1873.
Right, an old bond.
And this old bond paid a high 7% interest rate. It was trading in London.
But there is a massive catch.
A huge catch. This bond was scheduled to be retired in 1897. The Japanese government was actively paying it off.
It was literally expiring.
Exactly. So researchers took the data from that dying 7% bond, and they just drew a straight line connecting it to a brand new 5% bond that was issued after the gold standard.
Wait, they just put them on the same graph and drew a line downward?
Yes. They pointed to the slope and said, look, the gold standard works. Rates went down.
That is so profoundly misleading. Why does the expiration date of that old bond ruin the math?
Because of how bond redemption works. The 7% bond had a guaranteed payout at its face value.
Par value.
Right. Investors knew exactly what date it would be paid off, and they knew exactly how many pounds the government would hand them.
So if you know Japan will buy this bond back from you for exactly 100 pounds next Tuesday,
You are never under any circumstances, going to pay £105 for it today.
Right. You would be guaranteeing yourself a loss. You were just setting money on fire.
The price had an artificial ceiling. It had absolutely nothing to do with investor confidence.
It had nothing to do with the gold standard.
Exactly. It is an absurd comparison.
It's like taking a rusted-out car that you are legally forced to scrap tomorrow. You compare its price to a brand-new sports car, and then you tell everyone your negotiation skills magically improved.
It completely destroys the textbook narrative. The proof is entirely manufactured.
So we need the truth. We need a real benchmark. How do we actually know what foreign markets thought of Japan's decision?
We have to look at a bond that existed before, during, and after the legislation.
A continuous thread. Because capital markets cannot be fooled. Politicians can lie, but money tells the truth.
Exactly. And the authors of our source paper found it. The 5% consolidated loan bond.
The smoking gun. Tell me about this bond.
It was a long-term piece of debt. It traded heavily in Tokyo. But crucially, it was also actively traded in London.
Okay, so we have the exact same asset trading globally. We can watch the real-time reaction of foreign investors to the gold standard.
Right. And if the textbook theory is true, this bond should skyrocket in price.
Because Japan is suddenly a safer bet.
Exactly. Investors should be fighting over it. Well, what actually happened?
They completely panicked. They frantically dumped Japanese debt.
The price collapsed. We can track it week by week.
Let's look at March 1897. The gold standard law is introduced. The bond is trading in London at roughly £105.5.
People are paying a premium. They feel okay.
But then the market digests the news. They realize what this policy will actually do to Japan.
By August, right before the gold standard takes effect, the price violently plunges.
It drops all the way down to £95.875.
Investors are voluntarily taking painful losses just to get this toxic asset out of their hand.
If gold is a seal of approval, why is London throwing that seal straight into the garbage?
Well, the traditional excuse is that London bankers were just biased. They say Europeans just didn't trust an Asian nation.
The cultural bias argument.
Right. But the data kills that excuse instantly, because this wasn't just happening in London.
It was a global symphony of panic. Let's look at Tokyo.
The domestic market. If London was just prejudiced, surely the Japanese investors themselves felt safer, right?
You would think so. But the Tokyo exchange was highly sophisticated. And when you overlay the bond prices in London and Tokyo, they move in absolute lockstep.
It is a mirror image. Arbitrageurs kept the markets linked via telegraph.
So the Japanese government forces this policy through. They promise everyone borrowing will get cheaper. What actually happens to domestic borrowing costs?
They do not drop. They spike.
They shot up by 30 basis points in 6 months, inside their own borders.
The domestic market saw right through the political lies. Money got more expensive for everyone.
It makes no sense on paper. You adopt the ultimate first world financial rules. You expect a parade and cheap capital.
And the market just yawns, dumps your bonds, and hikes your rates.
The good housekeeping seal was a total mirage. But Japan's ambitions were way bigger than just interest rates.
They wanted prestige. They wanted to be a top-tier empire.
They thought joining the Gold Club gave them instant VIP status.
And instead, the world humiliated them.
Let's fast forward to 1899, the credit Waterloo. Japan has been on the gold standard for 2 years.
They just won a war against China. They feel invincible.
They think their credit rating is basically equal to Germany or Italy.
So they decide to make a massive entrance on the global stage. They go to London to issue a new bond.
100 million yen. It is a staggering amount of debt. They expect British bankers to just throw money at them.
And it is an absolute catastrophe.
A 10% humiliation. Less than 10% of this vital bond issue is actually bought by foreign investors.
Nobody wanted it. The yield was pushed up to nearly 4.5%, and London still aggressively rejected it.
Imagine being the Japanese delegation. You throw the biggest financial party in your nation's history, and the guest list just ignores you.
It was a nightmare. It made them look incredibly weak to the other empires.
So they scramble. They do a massive cover-up.
They forced their own central bank, the Bank of Japan, to secretly step in.
The Bank of Japan is ordered to secretly buy up 45% of the entire bond issue.
They literally had to bail themselves out in secret.
Wait, how do you even do that in 1899 without causing a massive scandal?
Shell transactions. Proxy banks. They funneled money to allied banks to buy the bonds in London. It created a fake illusion of demand.
And they took a 14% discount on those bonds. They took a massive financial haircut just to save face.
They sold their dignity at 90 cents on the dollar.
The titans of finance, guys like J.P. Morgan, the Rothschilds, they looked at Japan's shiny new gold standard and slammed the door.
Gold offered zero protection against market reality.
Which brings up a crazy question. If Japan needed money so badly in 1899 that they faked a bailout, why didn't they just borrow foreign money a decade earlier?
Why wait so long to fund your Industrial Revolution?
Was it just because they didn't have the gold standard yet?
No, it had nothing to do with gold or interest rates. It was about raw terror.
The fear of Egypt. This gets incredibly dark.
Back in 1880, some prominent statesmen proposed a specie bank. The whole goal was to aggressively sell Japanese debt to Europe.
They wanted to open the floodgates for foreign cash.
But the finance minister, Matsukata, violently killed the idea. He crushed it immediately.
Why block the money you need to build your country?
Because Matsukata knew exactly how 19th century geopolitics worked. He wrote this terrifying rebuttal. He said, and this is a quote, "We would have nothing to do when Japan should be a country like Egypt, Turkey, or India."
Egypt, Turkey, India, what did those three have in common?
They were victims of sovereign debt traps.
They took on massive debt from European banks. And when they couldn't make the payments,
The Europeans didn't send lawyers. They sent the military.
look at Egypt. They borrowed millions to build the Suez Canal. They defaulted.
And the British government literally took over the Egyptian treasury. They installed a puppet government. Eventually, the Royal Navy bombarded Alexandria.
Foreign debt was just the first wave of colonization.
The bankers show up. The gunboats are right behind them.
And Japan was uniquely defenseless. They didn't even have tariff autonomy.
Right. They had been forced to sign unequal treaties with Western powers. They could not legally set their own taxes on imported goods.
So if a financial crisis hit, they couldn't raise taxes to pay their debts.
Matsukata was terrified. If Japan owed millions to London, one bad harvest could mean the British Navy sailing into Tokyo Bay and seizing the country.
Debt meant death.
They deliberately starved their own economy of foreign capital for decades just to stay independent.
It wasn't about the gold standard, it was about survival. But eventually, Matsukata changes his mind. He becomes prime minister.
He forces the gold standard through in 1897.
He promises the public it is safe now. He says gold will bring a massive boom of investment.
And what actually happened?
A brutal, absolute winter for the real economy.
The disappearing boom.
Let's look at the Tokyo Stock Exchange. If the government guarantees a golden age of cheap money, investors should be thrilled.
The market should be rallying hard.
Instead, it is a bloodbath. The index plummeted 35% in the single year before the gold standard was adopted.
35%. That is Great Depression-level carnage.
Generational wealth was just vaporized because the smart money knew this policy was toxic. And after it passed, the market bled another 10%.
It wasn't just rich guys losing paper money either. The physical economy froze.
Let's go to Osaka, December 1897. Osaka is the industrial heart of Japan.
Textile mills, shipping, manufacturing.
And it is completely paralyzed by a financial panic.
The local newspapers are apocalyptic. The Jiji Shinpo paper runs a massive editorial.
They call the gold standard the worst mistake ever committed by the government.
That is a staggering insult to print in Meiji-era Japan.
The foreign investors never showed up. American and French syndicates actually came to Japan. They toured the factories.
And they left without spending a single dime.
So there is no foreign money. Domestic rates are spiking. The real economy stops dead. Railway projects are abandoned. Factories lay off thousands of workers.
And we have the macroeconomic iron evidence to prove it.
The numbers do not lie. Look at the investment to GNP ratio.
This tracks how much of the economy is being poured back into building new businesses.
In the 5 years before they adopted gold, that ratio was a very healthy 17.1%.
They were aggressively building the country.
But the 5 years after they joined the gold standard, the supposed golden era of capital,
It drops to 16.2%.
it literally shrank. The investment boom was a total lie. They choked their own economy for a status symbol the world didn't even care about.
Which brings us to the most insane puzzle of this whole story.
Right. If this policy was literal poison, if it crashed stocks, caused a panic, raised rates, and humiliated them in London.
Why on earth did the government sacrifice everything to force it through?
To understand that, we have to look at how they paid for it. The Sino-Japanese War Indemnity.
This is wild. So Japan beats China in 1895. They forced China to pay massive reparations.
And the original treaty said China would pay in silver.
Because the whole region ran on silver.
Yeah.
But Matsukata steps in. He changes the terms.
He forces China to pay the indemnity in British pounds, deposited directly into banks in London.
He weaponizes the blood money. He uses it to hoard gold reserves in Europe.
He unilaterally builds the war chest he needs to force the gold standard. But again, why?
Especially when the smartest businessmen in Japan were begging him to stop.
Enter the hero of the resistance, Aichi Shibusawa.
The father of Japanese capitalism.
This guy founded over 500 enterprises. Banks, paper mills, the stock exchange. He knew exactly how the economy worked on the ground.
He wasn't a politician. He was an operator.
And Shibusawa was screaming at the government. He was telling them, do not adopt gold. Why?
Because the current system, the silver standard, was making Japan unbelievably rich.
This is totally anti-common sense to us today. We think of silver as second place.
But for Japan in the 1890s, silver was a magical wealth generator.
Look at the data. Between 1878 and 1893, Japan's exports to gold standard countries exploded by 260%.
It was an industrial renaissance.
And it was all built on a massive currency arbitrage.
We have to explain this arbitrage. It is the whole reason the business class fought back.
I use a treadmill analogy for this. Imagine you are running on a treadmill that is slowly moving backward. That backward motion represents your operating costs. But at the same time, you are handing the products you make to someone on an escalator moving steadily upward. That escalator is your revenue.
It is a structural guarantee of profit.
Let's look at Japan's biggest export, silk. 41% of all their exports was silk.
The lifeblood of the economy.
And the whole supply chain is domestic. You grow the bushes, raise the worms, spin the thread in Japan.
Using Japanese workers.
And you pay those workers in the local currency, silver yen.
And globally, silver is steadily dropping in value compared to gold.
So the currency you use to pay your costs, the backward treadmill, is getting cheaper and cheaper.
But you sell the silk in London or New York.
Gold standard countries. You get paid in strong, appreciating gold. The upward escalator.
Your profit margins just automatically expand. You don't have to work harder or invent better machines. The currency divergence just hands you free money.
Shibusawa looks at this and says, we have a golden goose. It is printing money. Why are you trying to kill it?
Because adopting gold would instantly equalize the currencies.
It would slam the arbitrage window shut permanently.
It would murder the exact profit engine that built their modern industry.
The business class hated the gold standard. The public hated it.
Which brings up a huge political problem. How do you pass a law that the entire wealth-producing class actively opposes?
You do the math in the imperial diet, the Japanese parliament, and it is impossible.
The ruling party, pushing the gold standard, only controls 89 seats out of 300.
Less than a third of the chamber. They have zero power.
And they are staring down two massive opposition parties.
The Liberals have 111 seats. The Progressives have 99 seats.
They routinely block the government just for fun.
There was mathematically no way to pass this bill.
So Matsukata resorts to pure, dirty corruption.
The devil's pact in the back room. Matsukata executes an unbelievable political bribe.
He goes straight for the leader of the opposition.
He targets Okuma, the head of the Progressive Party, the same party that has been screaming that gold will destroy the economy.
And Matsukata makes him an offer. He gives Okuma the job of foreign minister.
The most prestigious, powerful cabinet job available.
And instantly, miraculously, the Progressive Party drops their opposition.
They completely sell out their economic principles for a cabinet seat.
But even with that, the votes are still too close.
So Matsukata just expands the bribe operation. He targets the Liberal Party.
He systematically buys off 40 individual members of the Liberal opposition.
He offers cash, minor political appointments, railway contracts in their home districts.
And they form a fake splinter party just to vote for the Prime Minister's bill.
And even after all that blatant, disgusting corruption, the vote in the special committee was terrifyingly close.
14 votes in favor, 12 against.
A 2-vote margin. The entire economic destiny of the Japanese empire was decided by a couple of bought and paid for politicians in a back room.
Think about the textbook narrative. The majestic good housekeeping seal.
The noble academic signal of fiscal responsibility.
It was literally birthed in a corrupt, smoke-filled room of bribes.
If London bankers actually knew how the bill passed, they would have dumped the bonds even faster.
Absolutely. But we have to pivot here, because there is a massive twist.
The fatal illusion, right?
Right. The businessmen like Shibusawa were right about the past. The silver arbitrage made them rich.
But they were completely blind to a massive global tsunami heading right for them.
The silver island was shrinking.
The opposition politicians kept bragging. They said, look, our exports to China and the East Asian Silver Network are up by over 1,000%.
They felt totally safe in their regional bubble.
But Matsukata and the technocrats looked at the global map, and they saw an existential threat.
The entire world was abandoning silver.
Austria, Russia, Argentina, even India, a massive colonial economy, was prepping to switch to gold.
The gravitational pull of gold was unavoidable.
By 1897, 60% of Japan's total foreign trade was with gold standard countries. Only 30% was with silver countries.
The balance of power was completely gone.
This was the entry ticket. The Meiji government realized a brutal truth. If you stay on silver, you are the king of a dying, isolated island.
If you want to trade globally, you have to speak gold.
Transaction costs alone were a nightmare. If you are a Japanese merchant shipping to London and New York, your currency is violently fluctuating against European money every single day.
It eats your profits.
Yeah.
It makes long-term contracts impossible.
They didn't adopt gold because they believed the textbook fairy tale about interest rates.
They adopted it because they literally had no other choice to survive.
Which leads us to the ultimate mind-bending plot twist of this whole story.
Prepare for the most insane reversal in economic history.
Okay, let's recap the bets. Shibusawa and the business class predicted an export apocalypse if they adopted gold.
Matsukata and the government hoped for a stable trade miracle.
Who is right? Did exports crash?
No, they exploded.
After adopting the gold standard, Japanese exports to silver countries leaped by a staggering 1,525%.
It is an unbelievable surge.
How? Did the government's brilliant foresight magically work? Did the good housekeeping seal finally activate?
No, it was pure, absolute, unadulterated dumb luck.
Dumb luck on a planetary scale.
Literally the exact moment Japan locked their currency to gold, the global commodity markets flipped upside down.
The value of gold actually began to depreciate against silver.
The entire trend of the last 20 years just violently reversed.
Why? Because prospectors suddenly discovered massive new veins of gold in the Klondike.
And engineers in South Africa figured out how to extract gold from low-grade rock using cyanide.
The global market was suddenly flooded with new gold.
So for decades, silver was falling, which made Japan rich. The second they switched to gold, gold starts falling.
The exact same dynamic that made them wealthy on silver, the backward-moving treadmill of costs, suddenly started working perfectly in their favor on the gold standard.
It is the ultimate face-slapping reversal. Think about the irony.
If they had listened to the brilliant businessmen, if they had stayed on silver to protect their advantage,
They would have lost their competitive edge completely. Silver was rising. Their exports would have become massively expensive.
they would have choked to death on the silver that made them rich.
But because Matsukata pushed through this corrupt, unpopular law,
Ignored a stock market crash, bribed politicians.
he accidentally put Japan on the winning side of a random mining fluctuation in the Yukon.
History books call these guys visionary financial geniuses.
When really they crashed their own economy, got humiliated in London, and were saved from total ruin by random gold strikes in South Africa.
They bought a lottery ticket while their ship was sinking, and they miraculously hit the jackpot.
Japan's masterstroke was just political corruption, fake theories, and unbelievable luck.
So, wrapping up this deep dive, are we just repeating this exact same history right now?
We have to look past the shiny metals and see the pattern.
The official narrative of finance is always clean, rational, and mathematical. But the reality is always messy, highly emotional, and driven by random luck.
And this connects right back to you, the listener.
Yeah. Think about the financial rules we live under today. We don't use gold anymore. But we have new, good housekeeping seals.
Developing nations tear their economies apart to hit IMF targets, just to signal they are responsible.
Corporations twist themselves into knots to hit arbitrary ESG metrics for cheap capital.
Nations desperately cling to US dollar pegs because they are terrified of losing access to the SWIFT banking system.
And you see experts on TV confidently predicting exactly what these policies will do. They show you pristine charts.
When you see that unearned confidence, remember 1897 Japan. Remember that the rules of money are deeply political.
They are driven by a primal fear of being dominated by bigger powers. We love to think our modern financial system is this flawless, rational machine.
We think we perfected the math of capitalism.
But if the entire success of a nation's monumental financial leap can hinge on a random gold strike in Alaska and a dirty bribe in a Tokyo backroom,
It really makes you wonder.
it leaves you with this provocative thought. How much of our current highly engineered global financial system is just a collective illusion? Are we all just agreeing to believe in the math, simply hoping it holds together until tomorrow morning?